Walk me through the thoughts behind all of this.
Yeah, I mean, first off, it comes down to demand, because if Model 3 demand does not start to uptick in the U.S., and especially in Europe, what we're seeing, it all comes down to profitability in the second half, and that's really the issue here. That's the concern of the street, and it's really a perfect storm that's forming for Tesla, which is concerning us more and more, which is why we lowered our price target.
So, Dan, I've got to be honest with you, 230 still sounds bullish, doesn't it?
Look, I mean, I think right now this continues to be a very difficult stock in terms of trying to get your arms around valuation, because if profitability does not come in the second half, they'll have to raise $1 to $2 billion more of capital, and then this starts to take another turn from there. So that's why right now we're still cautiously optimistic that they can get through this period. But I'll tell you right now, some hurricane-like headwinds from Musk and Tesla going forward, while they're focused on sci-fi projects like robo-taxis and insurance instead of what the core bread and butter Tesla 3 demand.
So, Dan, let's talk a little bit more about your price target. Right now, this is feeding on itself. We're down more than 6%. We're at around 196, 197. You're looking for 230. Just acknowledge the biggest risk around that price target. What is it right now?
Biggest risk, if profitability in the second half doesn't happen, all bets are off. Because at that point, they'll have to raise more capital, and the valuation continues to take a step downward. So I think it really comes down, not in the 2Q, but the second half, they need to have profitability ramp. That's why Musk is reining in expenses left and right, because they know that. Because if second half they don't hit profitability, they'll have to go back to the capital markets for more capital.
Dan, when you say all bets are off, do you see a real risk that this just spirals out of control?
I mean, look, I think that obviously is more draconian, which right now we don't see that, because they're well-funded. The core complex of Tesla continues to be there. I view this as just an extremely turbulent period, and they need to navigate through this storm. And I think the issue here is with an inexperienced CFO doing that, it's hard for investors to sleep at night, and that's why you continue to see the stock go south, which is why we continue to be cautious on it and like to watch this from the sidelines, although it's a very fluid situation in terms of demand and profitability.
So, Dan, you still sound somewhat constructive about what could happen here, and that's captured in your price target. What are the levers they can pull to avoid that cash call later this year?
Well, they're going to have to cut expenses across the board, and I think they've started to do that, and I think you could see more of that over the coming months. And then it comes down to Model 3 demand in the U.S. You need to see the uptick. They need to do a much better job in terms of starting to see that rebound demand in the second half. And Europe, those logistic issues need to be fixed in 3Q and 4Q. Those are the keys.
Can they fix it that quickly?
It's going to be tough. I mean, and I think it's going to be extremely difficult for them to fix it, especially as it's a growth company trying to cut costs. And Musk obviously has a lot of endeavors that are very transformative, as they talk about. So they're going to have to significantly look at, let's say, the top 8 to 10 initiatives and probably cut a few of those, because it just comes down to the math. The math doesn't lie in terms of what they need to do.